Well, markets continue to soar in part now, I think, to an assumption that tax cuts are going to come sooner or later. Ironically, it's the GOP that can't get on the same page with each other. And you really have to wonder why there are members of this party that have lost faith in supply-side economics. Reagan gave us the economic template. Think about this. January 1981, Reagan sworn in, 41st president of the U.S., and he lifts the nation out of a decade of darkness and faded glory. He decided Morning in America could be achieved with radical tax policy that focused on workers, not the government's coffers. His supply-side economic policy was a major success. Tax rates dropped to 28% from 70%. This is over a three-year period by 1983, and our economy took off. GDP growth averaged 3.5% for all 8 years, 4.6%, though, once that low rate was established. In fact, in 1984, 7.3%. Employment tried 16.5 million jobs. Participation rate, 63% from 59% when President Reagan got into the White House. Listen, all of this helped our economy boom, meaning incomes in current dollars are up 54%, adjusted for inflation, up 8.1%. Now, Reagan's greatest regret was the 186% increase in U.S. debt under his watch. Let's face it, though, a big chunk was to build the military and defeat the Soviet Union. But for the small government president, it remained a sore spot for him. Nevertheless, Reaganomics saved the nation so much, you have to wonder why there's resistance against it right now. Joining me to discuss, Shelby Holliday, senior video reporter at the Wall Street Journal, and Kevin Kelly's back with us as well. Shelby, what's the deal? Why are Republicans sort of antsy about the idea that, hey, this will spur the economy?
That's a good question, because broadly they want tax cuts and they want to simplify the tax code. But then when you look at all the details and tax codes create winners and losers, they get nervous, whether it is about the standard deduction, whether it's about corporate tax rates. Is it too low at 15%? Most people think it'll be in the 20s. I think a lot of people are worried about the deficit. And one thing that's been floated this week is Trump wants Democrats on board, and he might be willing to give them some infrastructure deals. If they do that, if you spend on infrastructure and cut the tax rate, you're adding a lot to the deficit, and that is something these conservative deficit hawks aren't fans of.
Kevin, is the market concerned about what the ultimate deal is as much as just getting something done?
I don't think so. I think the market is actually just focused on what's going to happen with monetary policy. I mean, you've basically seen a bunch of Fed governors before the blackout period say, listen, we're going to be focused on the data, and actually these hurricanes may impact the GDP, so we're probably not going to raise come December. And I think tax cuts would be icing on the cake. You haven't seen it baked into a lot of the forecasts on the S&P 500 estimates going out to next year. They've actually baked it into less than a 20% chance, and most of the analysts only give a 2 to 4% bump because they roll off, and that's the issue, right? Tax reform, it will not impede business decisions, right, because they know it's going to be permanent. So that's why you're seeing the market really focus on what's happening on the monetary side, not the fiscal side, because the infighting in Washington is very, very discouraging, especially because you're seeing a lot of senators as well as people in the House saying, listen, I want the state and local tax deduction still there.
I would also say, though, the uncertainty of whether these would be permanent cuts versus temporary is a huge deal to businesses. They want to obviously be able to plan ahead as far as they can.
10 years is not enough, huh?
Well, 10 years...
10 years is an arbitrary number, by the way. That doesn't need to be. It could be a 20-year number. It could be a 30-year number. It's very arbitrary.
Cruz made that point with Maria yesterday,
Right, and they'll take tax cuts. I mean, every business wants tax cuts. But when you talk to business leaders, it's not so much that they don't think tax reform will get done or some sort of tax cut would get done. It's just how much. Right. So a little bit is baked in, but it's hard to know what.
Well, here's the biggest issue that I see. It was basically disingenuous saying they needed to start with health care, right? Because now they're moving on to tax reform.
Let me just quickly ask you, Kevin, because we closed at all-time highs, and now we're starting to see buying in stocks that were left for dead. Does this rally continue in your mind next week? Yeah,
the rally does continue, and one of the reasons why is the dollar is continuously getting weaker against the pound, against the Swissy, against the euro. So that actually benefits the large multinational corporations and the S&P 500. Look at small caps not doing well. They need the dollar to be stronger, and they need tax reform to come through.
All right. Thank you both very, very much.
All I got to say is North Korea could change that.
You think so?
We'll see what happens.
We'll see.